Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, we're now into the third consecutive day as the bull trend holds since rejecting off that key level of 66.65 and now focuses on the level around 67.35 where we're trading now. Could see a little bit more upside potential towards 67.60, 65 and a break there. Gives it a view higher to 68 to 68.5 cents. When we look at the broader case, still plenty of room for a bullish case as the weekly still hold to a strong ADX, RSI and MACD. So likely the pullbacks will be shallow. Turning to the US dollar, it dropped at 98.40.45 and now looks to possibly a further sell-off down towards 97 as a potential target as the market hears further echoes of Sell America theme gaining traction after President Trump announced new tariffs on several European countries. While the softer greenback is underpinning the Aussie, it is underperforming other pairs ahead of Thursday's Australian employment report, where markets expect around 28,000 jobs added alongside with unemployment rising to 4.4%, which is keeping traders cautious on the RBA outlook despite the supportive external dropback. Even though there is still further data to come and looking to US GDP and the Fed's preferred inflation gauge, the core PCE price index, for the next directional clue out of the US. The euro also holds to a positive but erratic price action after posting an engulfing candle, rallies higher into the 117 region, and now possibly could see 118 figure 40 on the cards. In light of how the technicals look, we can turn to the weeklies and they have improved, especially with this engulfing candle, but need to the end of the week to confirm. Nevertheless, the bulls with the Australian dollar are still out there. Turning to dollar yen, all eyes on this trend line, and if we do see a clear break, that is of 157.30.50, then it's all eyes on the downside towards 155 as a potential target. Quite a deep drop, but I feel this trend does warrant a correction. So let's see if we can get it following the recent long-legged doji. Sterling, well, an engulfing candle, and still waiting for that further demand to rally on. That could see the move towards a potential target of 135.10.15 and maybe 136. But the 135.10.15 has been a struggle, so we do need to clear that first. Turning to gold, well, what a market that is, as it explodes above 4,800 and now looking at a high around 4,878. Therefore, could see further gains with 5,000 on the cards and maybe getting there very soon, considering how this rally is performing. Nevertheless, the pullbacks are shallow and moving further away from this trend, and the bulls are still dominating this move as much safe haven demand is on the horizon, but I still feel the gains are sustainable. Finishing up with oil, well, the whipsaw price action continues, and I still hold the call back to that recent high around $62 a barrel, with the support seen around 58. Well, that's a wrap. Thank you for joining me, and as always, we'll have the intraday report. I hope you enjoy the great start to the day.